ask you about the top winner on the Nifty today, which is Coal India. Let's run our viewers through a note that's coming from Phillip Capital. They have initiated coverage buy rating, target price of around 611 rupees a share. Their header says that the growth story is likely to stay longer for this particular company. And let's break it up into 4 big triggers. And some of them should come up for you on the screen. First, there's an industry tailwind. They're saying that India's power needs an additional amount of thermal capacity and in turn will require more coal. So they have put out a couple of numbers. The energy demand for the last year, it grew in low double digits, was at around 243 gigawatts. Now they're saying in the coming years, they're expecting that number to go to around 260 gigawatts and then move to around 400 gigawatts by 2030. So because of that, we'll require a higher amount of coal. They've also said that the government of India, well, they have sanctioned 88 megawatts of thermal capacities. So just, this 88 megawatts of thermal capacities, you assume that it functions at around 75% PLF. It could increase the total coal demand by around 400 million tons odd. And the third factor is that they're looking at commissioning annual rate of around 6 to around 8 gigawatt per annum. That compares with the 5-year average of around 4 gigawatt. If that is the case, then in fact the increase in the annual demand for coal will go up by around 30 to 40 million tons. So the first part is on the industry tailwind. Point number 2, that's with regard to the volume growth. They are factoring in a volume growth for Coal India of around 8% in the next few years. That's FY24 to FY27. They've given a comparative number. In the last 5 years, India's coal demand grew by around 4.8%. And Coal India shipments, well, they grew almost mirror image at around 4.9% odd. Remember, Coal India fulfills close to around 80% of India's coal production. So it moved more or less in line. For the next few years, that's from 2024 till 2030, they are saying that Coal India's volume growth could grow by around 8%, though the thermal coal demand will grow by around 5.5%. Why is it outpacing the coal demand, the thermal coal demand? Because there'll be restart of some of the thermal projects, and also the government intends to reduce the imports of coal. So that explains why the volume growth will be higher than the coal demand growth. Point number 3, profitability, they're saying will stay around the 500 rupees per ton, which will be more or less at par with what we saw in the past year, that's 2024, but it'll be significantly higher than what we saw in the previous decade. And point number 4 is they're talking about the solid balance sheet that Coal India has. They're sitting on cash of around 27,000 crores. They also have a capex lined up of around 20,000 crores on. But they're saying the cash burn will be lower than the cash generated. So that's why the cash per share will only go up from here on. They are penciling in a number of around 69 rupees per share in comparison to around 44 rupees per share. So basically, cash generation more than capex. They highlight a few risks though. If there's a sharp fall in international coal prices, in case there's a delay in construction as well as ramp up of capacities, and if there's higher than expected production from private miners, if that's the case, then it reduces Coal India's pricing as well as volume offtake. So put all this together, Phillip Capital, they have initiated coverage on Coal India and they have a target price of 611 per share.